Welcome to Finance in 5. When Warren Buffett speaks or acts, millions of investors pay attention.
And more, much more than this, I did it my way. And that's as far as we go. And I've enjoyed this. And I think maybe we can show up at the Grammys, the two of us.
The folksy financial guru who eats at McDonald's and still lives in his hometown of Omaha, Nebraska, is a billionaire many times over. So Buffett buffs watch him closely to pick up tips on how they can be incredibly wealthy too. And even though some people question his judgment concerning how Berkshire has navigated the tricky terrain of the global pandemic, the principles he espouses for preserving finances during these rough times are timeless and can be applied to anyone. So with that mentioned, let's dive into today's video. Corona and Cash, 5 Buffett Rules. Coming up today on Finance in 5. Ears have pricked up in recent weeks as Buffett has shared some money wisdom about the coronavirus crisis. Lately, health watchdogs have been giving Wall Street jitters as reports of fresh outbreaks in multiple states in America hit the headlines. So amid such uncertainty, what does Warren Buffett say that you should do? Rule 1. Take advantage of low interest rates.
The Federal Reserve did the right thing, and they did it very promptly, which they should have, and I salute them for it. This is a very good time to borrow money, which means it may not be such a great time to lend money, but it's good for the country that it's a good time to borrow money.
With interest rates falling, Buffett says it's a great time to borrow. Buffett became one of the wealthiest people on the planet by capitalizing on opportunities. He sees some fantastic opportunities right now, courtesy of the Federal Reserve. To help the economy recover from the coronavirus, the Federal Reserve did the right thing by cutting a key interest rate to near zero, Buffett said. In actual fact, it was the only thing that they could do. What was the alternative? Raise rates? Absolutely not. If they did that, it would blow up their balance sheets, leading to absolutely astronomical rises in interest payments on the national debt, which couldn't possibly be repaid. Warren implies here that for home buyers and homeowners, it's an excellent time to borrow. Thanks in part to the Fed, rates on new and refinanced mortgages are the lowest on record, and it's even possible to find 30-year loans with rates of under 3% if you shop around and compare mortgage offers from several lenders. The only problem, however, is that many banks are tightening up lending standards while the minimum credit scores and income levels required to access financing have increased, which is unfair at a time when employment is turning down. But the spread between what banks are charging in interest payments on finance and what they are paying to bank depositors in the form of interest payments on savings is absolutely historically at record highs.
We put our money where our mouth is.
It's easy for the chairman of a multi-billion-dollar company who has piles of cash to extol the virtues of low-interest borrowing. But in practical terms, perhaps the best advice is to live within your means and don't spend what you can't afford to repay. Nevertheless, yes, it's a good idea to refinance your mortgage for a cheaper fixed-rate one if you possibly can, as that means that you're saving yourself valuable capital each month, which can be redeployed and grown elsewhere. Rule 2. Always be ready for the worst. Buffett said a megacatastrophe was coming. They don't call him the Oracle for nothing. The multi-billionaire said during an interview in March 2020, "I've always felt a pandemic would happen sometime." Last year, he warned that the world was due for a mega-catastrophe. Buffett told his shareholders in a letter that it would be some kind of total surprise that would dwarf devastating hurricanes Katrina and Michael. He said that Berkshire, which is big in the insurance business since it owns Geico and other insurers, would suffer massive losses, but would be ready for business the next day. I'm not a conspiracy theorist, but it's interesting that Warren is such good friends with Bill Gates, since many people claim that he is somehow looking to leverage this global situation to implant humans the world over with vaccine microchips, although he was banned from Russia recently apparently. Which brings us on to Rule 3. Don't carry credit card balances. Buffett says,
I think people should avoid using credit cards as a piggy bank to be rated. I had a woman come to see me. She'd come on some money, not very much, but it was a lot to her. She's a friend of mine, and she said, "What should I do with it?" And I said, "Well, what do you on your credit card?" I think I asked her, and she knew, and it was something like 18% or something. I said, "I don't know how to make 18%." I mean, if I owed any money at 18%, the first thing I do with any money I had would be to pay it off. It's going to be way better than any investment idea I've got. And that wasn't what she wanted to hear. And then later on in the conversation, she talked about her daughter, and her daughter had $1,000 or $2,000 or something, and she said, well, what should I do with the girl's money? And I said, have her lend it to you. And I mean, if you're willing to pay 18% or whatever, I mean, she's not going to find a better deal. I'll lend you money and pay that off. And if they're really a good credit and they don't want to do it, come and see me personally. I'll lend you the money at that rate.
This is very good advice, especially from somebody who owns so many shares in American Express. Warren once said that he did have an American Express card himself back in the 1960s, but has never really used it. And clearly he isn't particularly concerned about collecting airline reward points. But with layoffs skyrocketing during the outbreak and lockdowns, Americans have been piling on more credit card debt than usual. 47% now carry balances, up from 43% in March, and nearly a quarter say that they've taken on more card debt amid the coronavirus downturn, according to a survey by creditcards.com. Whenever credit card debt seems overwhelming, experts say that a good first step towards getting rid of that debt is to scoop it into a debt consolidation loan at a much lower interest rate than 18%. That's something that Warren would doubtless agree with. Rule number 4, stick to your long-term plan. Buffett says, stay on target with your financial goals. More than ever, Warren Buffett believes that he's confident the US economy will bounce back from the COVID-19 pandemic and associated depression. Nothing can basically stop America, he said at the online shareholders meeting. We haven't really faced anything that quite resembles this problem, but we've faced tougher problems. The American miracle, the American magic, has always prevailed and it will do so again. But he also said nobody knows what's going to happen, so investors should brace themselves for a potentially long recovery. You're going to get a fine result if you own equities and stocks over a long period of time, Buffett said. In other words, you need to hold on tight during these times. Many people use a financial planning service which can help them to stay focused with their investments. Some set up automated monthly investments in shares or stocks via an app. There are many good ones to use depending on where you live in the world. Apps such as M1 Finance and Robinhood are popular in America. I myself am a fan of Trading 212, but there are plenty of options out there. Finally, rule number 5, be careful with stocks. I did a previous video describing how Warren Buffett has gotten out of airline stocks because of COVID-19.
Warren, just to clarify on his question, he asked, did you sell your whole stake in all 4 of those
the
companies?
answer is yes. Yeah, when we sell something, we sell something, very often it's going to be our entire stake. I mean, we don't trim positions or like that. That's just not the way we approach it any more than if we buy 100% of a business, we're going to sell it down to 90% or 80%. I mean, if we like a business, we're going to buy as much of it as we can and keep it as long as we can.
The coronavirus crisis is ravaging entire industries, including retail, restaurants, and entertainment. But Buffett has decided that the damage to the airline industry is more than he can possibly bear as an investor.
Warren, why are you recommending listeners to buy now, yet you're not comfortable buying now, as evidenced by your huge cash position?
Well, as I explained, the position isn't that huge when I look at worst case possibilities. I would say that there are things that I think are quite improbable, and I hope they don't happen, but that doesn't mean they won't happen. I mean, for example, in our insurance business, we could have the world's or the country's #1 hurricane that it's ever had, but that doesn't preclude the fact we could have the biggest earthquake a month later. We don't prepare ourselves for a single problem. We prepare ourselves for problems that sometimes create their own momentum. And I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote. You don't need to pay attention to them. I mean, some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And you should not count on somebody else telling you is you should do something you understand yourself. If you don't understand it yourself, you're going to be affected by the next person you talk to. And so you should be in a position to hold. And I don't know whether today is a great day to buy stocks. I know it will work out over 20 or 30 years.
He has handed over responsibility for large portions of the company's affairs to other assistants. There's a guy called Greg Abel, I think he introduced at the shareholders meeting, who's doing a lot of the work.
In some ways, the best opportunity for people is when we're back working, clearly.
But this idea that Warren needs to know everything and be everywhere and have all the correct answers, well, I think we've seen that he perhaps doesn't. None of us do. But anyway, he still has been able to provide some useful advice and in the form of those tips. I hope that you found this video useful. Those are some things that you can implement today. Let's recap them again. Rule number 1, take advantage of low interest rates. If necessary, refinance your property if you possibly can. But more than that, live within your means. Number 2, always be ready for the worst. Maybe taking out life insurance isn't a bad plan. Rule number 3, don't carry credit card balances ever. The moment you spend money on a credit card, pay it back. Number 4, stick to your long-term plan. Keep working, keep investing, keep saving, keep being consistent. Number 5, be careful with stocks. So in other words, don't buy the high and sell the low, which is what Warren was doing. Thank you very much for watching. If you enjoyed this video, please like and subscribe and comment. And I look forward to seeing you next time. All the very best.
You should not count on somebody else telling you this. You should do something you understand yourself. If you don't understand it yourself, you're going to be affected by the next person you talk to. And